Futures trading is risky and can result in substantial financial loss.
Traders, today is Wednesday, June 18th, 2008, and we're going to take a very brief but thorough look at the indices markets and why we are having this down move today. The analysis called for a down move last night. We did the video and put it out on YouTube. We put the Omni recommendation out about it, and now I just want to show you why that Omni recommendation was looking for downside such as we've seen today. As we all know, because we have been following the analysis on a day-to-day basis, we have this head and shoulders that we needed to work with. This is a bearish looking head and shoulders, which produces a sell signal. Upright head and shoulders produce sell signals. Inverted head and shoulders will sometimes produce buy signals. So we had the head and shoulders. We all made our projection, and we talked about the market moving lower. Lo and behold, it certainly has moved lower so far. Look at the projection and look at the low. Not so far off. Then we discussed that the market will likely have a test of the right shoulder, and a failure of that test would bring a drop. I will say that again. We discussed this in the class the last few days and in the rooms. If there is a test of the right shoulder and it fails, down we will go. What does yesterday do for us? Yesterday gives us the test of the right shoulder. Look at how perfect that test was. Here is the high for yesterday, and the white line represents the right shoulder. You don't know exactly where in the right shoulder the height of the test will come in. There's no real calculation for that. But you could have expected a test to be as high as this trend line right here, capping off the highs, and that test would have been as high as 1383. In fact, it only got to the 1372 level, which is right at the bottom of the right shoulder of the head and shoulders. It stopped cold and put in what we call a swing day right here. Boom, here's your swing day. I'll represent that with a thicker red line. Here was your swing day. On top of that, you ran into the Omni proprietary average right there at the high, and there was the resistance of the right shoulder. I mean, look at that, traders. That is a setup of all setups. You can't miss that one. So technically the picture was dead on for a drop today. Again, let me repeat this for you traders that might be new to the classes. A head and shoulders formation of one which we see here presents a bearish signal. There is a way to calculate the length of the drop and add it to the bottom of the breakout, and that should give you your projection, which it has done, illustrated or represented by this red line. So we had the breakdown, as you can see, down, 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 down. And then the market's indicators became slightly bullish, and we thought we'd have a little bit of upside here. And so we did, and we traded it from the upside, and we had a little bit of upside. But then the swing day came in. The swing day comes in here. Swing day is when a market sticks its head up higher than the previous day, puts in a high, turns around, drops, and settles by the low of the day. That's considered a swing day. In other words, the market opens and rallies, turns around and drops, and puts in its settlement towards the low. That is a swing day, especially if the day before and the day before it are of lower prices. So this is your swing day. This is what we have here. On top of it, hitting the right shoulder as a test and failing at the Omni's proprietary moving average. That gave us today's drop. Boom. Very easy to spot. The analysis saw it, but the indicators were mixed. So you have a definite pattern when you look at the price pattern of the price chart. The visual pattern here is absolutely bearish. And then you hit the average, bearish, but the indicators were not as bearish as the market. And you know me, I like to look at all the indicators. I could not put 8 indicators together all pointing in one direction. So I said, okay, you still have to go with the signal because it's absolutely before your eyes. So here is that reason why the market has come down. We're going to look at this in a couple of other charts. But before we leave this, watch this little piece of action. Yes, this is a head and shoulders. Yes, that's a very topping action. But you know what this really is, traders? This is a head and shoulders of a much larger magnitude. Much larger magnitude. Because here is the shoulder and here is the head. And we're just beginning to form the right shoulder now. This could be enormous. This could be massive. Does everyone see that? Well, can everyone see that head and shoulders formation? Okay. Now, if that's the case, we have some serious down move coming. However, that would be us projecting what we think will happen as opposed to what might actually happen. The chart tells you what will happen. I always follow what the chart says. I could care less what I think. So, if that's the case on the S&P, let's go look at the Dow Jones. We'll erase everything on the Dow Jones chart and we'll start fresh. Here is what we are looking at now on the Dow Jones, traders, which is absolutely convincing. Once again, massive head and shoulders with on the Dow. This right shoulder is almost complete. That is a huge head and shoulders. Huge. Now, for you new traders that haven't been to my classes, I am going to show you something that should make you realize what we are looking at here and why it means more downside. Huge head and shoulders represent huge drops in the market, as did this one back here, which in fact was the top of the S&P third quarter into first quarter of this year. Third quarter 2007 into the first month of 2007. This was the drop that took place based on this massive topping head and shoulders pattern. After that head and shoulders was complete and we did a projection on it, which was astounding. The projection is here, and here is what happened. Well, now we have another enormous head and shoulders, and there is a projection. I can only project what it might be at this point because the right shoulder is not formed, and you must take your projection off the largest formed shoulder. However, if the left shoulder we will use for the largest formed shoulder, if we break out down here, you are looking at a massive drop, possibly as low as the 10.7, 10.8 area. Again, we will take one day at a time as we are day traders. But this look to the left topped off the S&P market, and this is the same look that you now have right here. Only it's not completely formed. It is 75% done, maybe 80% done. Does everyone see that? Traders, this is not rocket science, my friends. This is a fine art that is easily learnable to every one of you traders in this class right now and every one of you Omniacs that come to my site. Every one of you can learn this. It is not very difficult. Okay, this should give us a serious drop. Now you've seen S&P and you see Dow Jones. Let's go look at the transportation average now, which in my view and in the view of Charles Dow, who has been right for 120 some odd years, this is the leader of the economy, which in turn turns out to be the leader of the indices markets. This one is doing the same thing to us. It is putting in this big rounded top area, and what you have is the shoulder. And I don't know how high you want to make that shoulder, but you got a shoulder and a head. You might want to take the shoulder all the way up to here, so let's redraw that. And let's just say that this is the shoulder, straight out to here. And now that's a massive head. And if that turns out to be a head and shoulders, I'm afraid. Because that would be enormous. That's way too big. That is just huge. Is that one? Well, it very well could be, traders. It very well could be. Let's let that one develop. That is an interesting one. But within the head, you've also had this Not so symmetrical, but still the same head and shoulders. And the drop from it. Look at the drop that we've had since then. You want to see the projection? You think this stuff doesn't work? Or do you have any doubt on projections off of head and shoulders formations? Watch this. Here is the projection from the high to the low of that shoulder, and here it is at the breakout. We're almost there. We almost got there already. I can be a little more conservative if you want. Watch this projection. We can go from this part of the shoulder to this part and not take this little run up right here. And if we put that on our projection, I'll bet you that's almost perfect. Let me move the shoulder out of the way for a moment and show you this line when it's put at the bottom of this shoulder. Look at that. That's almost picture perfect. That is how you can get projections on where the market will go when you see a head and shoulders formation. Traders, that is a lesson that I hope you are heeding, especially you traders in this free class today, because that will make a lot of great trades for you and make you look like a genius in front of your friends if you can show them how to do that, and it works. So here's where we stand now. Head and shoulders are in abundance across these charts. Across these charts, they are in abundance. I want you to realize that that is what's going on right here and right now, traders. Okay, now the other indice markets that are coming down with the S&P, NASDAQ, and Dow Jones, S&P, Dow Jones Industrials, and Dow Jones Transports are the NASDAQ. NASDAQ just fell out of a pretty decent formation and broke its formation and started to come off, as you can see here. And watch the E-mini Russell, which is most important. Look at how the Russell broke code. I mean, it was like a soldier in a march until it broke out of this. Nice long trend that was building, almost parallel. And now look at it testing that bottom area. If it completely comes out of that, you likely have a serious drop coming our way. In here, you can also pull out an ugly looking but still there head and shoulders. Materializes right before your eyes, doesn't it, traders? They are all over the map. So that is what this mini lesson was about. I didn't want to go into this in too much detail. I did want a lot of you traders to see what's going on. And there is a longer trend that we've broken down out of as well, traders. Look at this one. It goes all the way back from the lows. And we are now below that, well below it, after today's drop. There is evidence of more downside coming our way. We are day traders. So we will only take what we see on a day-to-day basis, but that is not bullish. There was also a just about perfectly qualifiable mirror image trade that took place right here. Look, boom. I couldn't qualify it because highs and lows were of different sizes, but opens and closes were almost exactly opposite, and that deserved to be qualified, but I'm very stringent with my rules and I didn't qualify it. But the fact that it looks so much like a mirror image, look at the end result. Mirror image in place, down, down, down. So there's a lot of evidence, traders, that is pointing towards more downside coming. Let's see what we get out of it. That was my little lesson on head and shoulders, traders. I hope that this lesson helps you going forward, because they are here, they do exist, and you cannot avoid them. There is no way to hide from these. Technical analysis. That is what works. It works. I've just shown you before your eyes some very interesting and amazing projections that have come true right there. Simple to use. A round of applause for technical analysis. This isn't about whether I could make the call or not, whether the Academy made the call. Who cares? We need to look at going forward. Going forward, you use technical analysis the proper way, and I assure you that you will see these markets go to levels that you chose from the chart before the event takes place. I will repeat that. Before the event takes place. Imagine that, traders. I am teaching you a technique where you can sit by yourself and figure out where the market will likely go the next day. What value is that worth to you for the rest of your life? That is what you learn here at the Omni Trading Academy. That is why we opened up the Academy. That is what I offer to you traders, you Omniacs, as we like to call our fans who come to the site. So please keep continuing your education, keep coming to the classes, and I will teach you more things, more techniques like this, even easier and more precise with actual calculations that will just amaze you, because it amazes me, traders. I am not amazed that I can call the markets. I'm amazed that the analysis is the vehicle that allows me to be so accurate with calling markets. I am simply amazed every day. And I think it amazes you traders that come to the site, because we win way more than we lose at this site. And I'm not trying to throw a stat out there. I don't keep stats on our winning or losing trades. I watch my customer accounts, and their accounts seem to be going up. And that is not an easy thing to accomplish. So bravo to you traders that are following my work. Bravo to you traders that take the analysis and turn it into your trades. I am just, I don't even know what the word is, but it touches me to see how I am helping you traders and how well you're responding to the education. It's just fantastic. So thank you so much for coming to today's class, traders. I wanted you to see the head and shoulders for yourselves, and I wanted you to teach you how to do the formation and the calculation, and I hope you've learned that today. Thank you so much, traders.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.